Okay, so you have these concepts of tax avoidance and tax evasion. Right? Tax avoidance is legal, while tax evasion is, well, you could be imprisoned for that. You just read CIR versus TODA, you just remember that tax evasion connotes the integration of three factors: the end to be achieved, an accompanying state of mind which is described as being evil, bad faith, willful or deliberate and not accidental, and of course, or a course of action or failure of action which is unlawful. Now there's this interesting case. Okay, first, in Ungab versus Judge Kusi, tax evasion is deemed complete when the violator has knowingly and willfully filed a fraudulent return with intent to evade and defeat a part of all the tax. You just remember that. And there is this case, CIR versus spouses Antonio and Ruby Manley, where there is this, the term expenditure method. Okay? What's this expenditure method? You remember the case here in South Cotabato. It did not really reach the Supreme Court, but the thing here is that there is this rich farmer. Okay, he bought a vehicle and he paid it in cash. When the BIR examined the distributor of the vehicle, they found out that, okay, who's this guy? He paid in cash, and this vehicle is, is 1 point something million, etc. And they found out that the guy just declared an income so much. That means, where did this guy get the money to buy the vehicle? Say, for example, 5 million vehicle, or maybe 2 million vehicle, and he just reported an annual earnings of, say, 500,000. So that's the expenditure method. You will know that there is an undeclared income for tax purposes because the expense or the expenses is more than the income reported. That is the expenditure method. So the theory of this method is that the amount of the money that the taxpayer spends during a given year exceed his reported or declared income and the source of money is unexplained, it may be inferred that such expenditures represent unreported or undeclared income. That's expenditure method. Now, there is this also the concept of tax exemption. You remember that taxation is the rule and exemption therefrom is the exception. Okay, the only exception to the rule is that if the exemption was granted to private parties based on material consideration of a mutual nature, that is in the nature of contractual tax exemptions. When an example of that is when a government issues a bond. Remember the RCBC case, the 20 lender rule. We'll discuss it later. And that's how tax exemption should be. If a taxpayer claims for a tax exemption, it should be clear and there should be no room for ambiguity. The law must categorically exempt the taxpayer from taxation. You just read PAGCOR versus BIR, Western Minolco Corporation versus CIR, Tolentino versus Secretary of Finance, and CIR versus Acosta. It is said here, entrenched in our jurisprudence is the principle that tax refunds are in the nature of tax exemptions, which are construed strictissime juris against the taxpayer and liberally in favor of the government. The reason? Because of the gas lifeblood doctrine. It is a necessity. You have to pay your tax. Okay, so that's about it for tax evasion versus tax avoidance and the concept of tax exemption. Next, we will discuss tax amnesty.